Hi there, Dean Heskin, President and CEO of Swiss America Trading Corporation. Thanks for tuning into our podcast, The Secret War on Cash, where we take a look at what is actually taking place in this war on cash. And it seems to be a war that's building pressure and momentum by the day. I have my co-host with me here, Chris Agelastos. Chris, thanks for being here. How are you today?
Doing well, just trying to survive the 112, I think we're supposed to hit today in Phoenix.
Oh, my,
Yeah,
that seems a bit much. Well, good reason to stay
excessive
inside, actually. Yeah, for
for
sure.
sure.
Well, the secret war on cash. We've got Jeffrey Gundlach, the bond king, weighing in now on what's happening with the dollar. And one of the things I want to mention or point out for those who are tuned in or listening to this podcast, that it's number one, it's kind of, we've talked about this. It's bad that we are seemingly always talking about bad things, but they're very real things, and that's number one. Number two, the things that we cover, and this is by design, we utilize third party sources of information, so to see it's not just our opinion, it's not the gold guys or the gold company that's talking about these things out there. These are some of the most successful, well-known investors and money managers or analysts out there, and this is what they're all talking about. So getting into this article here, where the bond king, as he's known as, Jeffrey Gundlach, is talking about how the US dollar is going to continue going down, and he sees the American currency entering a bear market and collapsing 25%. And this has become a all too common theme, a recurring theme that we've been witnessing here with the dollar. And he gets into, and I'll let you talk about this a bit here, Chris,
hmm
but talks about the he calls it a pattern of lower highs, if you will, going back to 1985. And how, like, the dollar has been and will continue. I think he said there was one exception in 2020 where it did not, and I don't know if that it didn't really get into it, if that was related to maybe something with COVID or what have you.
hmm
But how from 85 the US dollar has been continually going down, and now we're talking, like, again, using his number here, a 25% drop. So, like, this, it seems very real, number one, and it's
Yeah,
graphically real, as he provides graphs here. And the trend on this is not something that I see stopping anytime soon, nor does he, and several others out there. So, like, is I think he's right here. I mean, do you see anything that would suggest that there's any reason to think otherwise than what he's saying? Maybe other than, maybe it's not going to drop as much, I guess.
right. That would be the icing on the cake if it just didn't perform as badly as he's predicting. But what I would like to point out is, like, we've seen these numbers before, so I know sometimes people, maybe if they didn't feel the pinch the last time this happened, or maybe they've forgotten about it, they think maybe we're being dramatic and blowing it out of proportion. But the dollar hit a pretty low in 2011 after the housing crisis and some of the banking collapses we had in our financial system here in the U.S. And we've had some good years since then as well. And all he's saying, by looking at the charts here, that essentially, if you take the last two big lows we had, which was in 2011 and again in 21, right, in the thick of COVID, and you draw a line between those 2 points, the way the dollar is performing now, it's trending downward to where we're going to see a low again, based on the charts, that is lower than what we saw in 2011. And so that would be the dollar dropping from about 98% where it is now to 72 or below, which again is 25% plus drop. So it's not
Right.
unheard of, even though it doesn't sound good. It doesn't mean you can't rebound from it. The key is protect yourself from it. The idea here is to have your some of your dollars in investments that are going to perform well enough over the same period of time to protect you against the downturn. It doesn't mean that the wheels are going to completely come off the bus and you're going to be left with nothing in the end. It just means that you need to be proactive, prepare for these things, and you'll be much better off in the end. Even if it doesn't go as low as he's predicting here, you're going to be much better off from a little bit of preparation up front than just kind of winging it and hoping things work out in your favor.
For sure, for sure. Well, and now you look at his prediction or projection, whatever you'd like to call it, and let's skip into this next article here,
Hmm.
where you also related to this. You have a U.S. bank exec who's warning excuse me, U.S. bank exec warns exporters are rejecting the U.S. dollar. So he's saying
Yep.
exporters are already saying we don't want the dollar any longer, and the thing that will give the dollar strength and or help it rebound at this point in any way, shape, or form is one of the main ingredients of that is people accepting it and or wanting it, and just the opposite is happening. And this is being reported by, again, somebody different, someone else. And
Hmm.
so if you as you look into this next article here with these countries that are rejecting the dollar, it's a pretty long article and a very good read for those of you tuned in. But as you get to the bottom of it, it even starts talking about how the other currencies out there, we'll call them competing currencies, are not only not going to lower, but they're actually getting stronger in this process. And so
Hmm.
this trend has started, and this is all related, and they get into this to BRICS. And I'm making a special note to mention that because our what do you want to call it, financial news programs, the people who are reporting on what's going on in our economy, there has been a gross neglect, in my opinion, of them reporting on what's actually taking place with BRICS, and it is going to have a very damaging, potentially damaging, and really, I think we could almost take the word potentially out of there at this point, repercussion to the U.S. dollar. And
Hmm.
so, tell us a little more, I guess, Chris, about what is when he says that they're rejecting the U.S. dollar. What does he mean by that? What does that look like?
Well, this is what's interesting here is this person actually went to the importers here in the U.S. that are bringing in goods from overseas, and they take polls and check with them to see what is happening, in their marketplace. And so they're going straight to the source here. So people can argue all day long that that this isn't happening, but when you're talking to the importers that are bringing goods in to the United States here, and you have these other countries requesting currencies other than the U.S. dollar. I mean, it doesn't get much more simple than that. And what they're noting here is not that everybody is refusing dollar payments, but that more and more suppliers are preferring to be paid in their own currencies or other currencies like the euro or the yuan, rather than the US dollar. And what that does
Right.
is it just threatens our monetary dominance. For a long time, we've talked about this. The dollar has had a good run. We've been given a lot of influence and control over all kinds of world matters because of the weight that our currency carries. And again, it's not to say it's just a switch that's been flipped off and now we have no say, but we're losing a lot of that monetary influence. And nations before that maybe were a little reluctant to refuse the dollar are now actually saying, just give us our own currency. And so, Canada, Mexico, China, they're preferring to be paid in their own currency or even euros than the U.S. dollar in many cases, and we're losing that influence. So, and even Morgan Stanley here, just at the bottom of the article, it mentioned that analyst from Morgan Stanley, in addition to the U.S. Bank Corps, was essentially saying the same thing, that they're predicting the dollar index to continue to fall and be into the low 90s. We were just talking in the previous article how we were around 97, 98% right now. They're predicting 91 by the middle of '06, which is about a year from now. And so that's just kind of echoing that same trend. This isn't just one person trying to make a statement and a name for themselves. This is multiple analysts across the industry discussing the challenges that the dollar is facing right now. So this is not going away.
Right, right. Well, and going back, referring back to the first article that we looked at with Bond King, you know, he cites in there how this progression that there he at least cited was from 1985. And the reason I really want to kind of jump back to that for a moment is because this is well before all this started happening with BRICS. And
Yeah.
so the deterioration, the erosion had already started, as we all know. But now when you have these countries who are taking a firm stance in not utilizing dollars and using their own currencies or alternate currencies, that only is going to make the situation worse. So if that trend had already begun,
Mhm.
and now you throw this gasoline on the fire, that does not bode well for the US dollar at all. And that's why, for those tuning in, financial diversification is so critical and so key. And I'll just shamelessly move right into this. If you've not looked into diversifying into metals, now would be an absolutely great time for you to do so. If you want to learn more about it, contact our office at 1-800-289-2646. Or you can even text us at that same toll-free number, 800-289-2646. Or you can visit us online at www.swissamerica.com. Talk to one of our representatives if you'd like. They'll answer questions for you, get you out all the materials you need free of charge so you can educate yourself, learn more about the market. And I believe if as you do that, you'll see why it is such a critical need that you do have this kind of diversification for yourself. So thanks for tuning in, Chris. Thank you for all that
Yep.
information. And for those of you that are not subscribed to this podcast, please do so, as we'd love to talk with you more in the future. So until then, have a great rest of your day, great rest of your week, and we'll talk to you real soon.